So what is a prediction market?
So, a prediction market is just a place where people with differing opinions about some future event can make a financial transaction based on their differences of opinion. Sort of that's the in the weeds. That's what the traders do. From the perspective of everybody else, instead of two people, now imagine a million people doing these kinds of transactions. And we have a million of these different predictions.
It sounds like to me essentially two people are making a bet and then other people can also get in on that bet and decide which side they want to go on.
Yeah. And it's more complicated even than that. There's people sitting on the sidelines waiting for other people to come to them. But to me, the real societal value of these markets is for the people who don't trade in the markets. If you go to any of these prediction market sites, there are thousands of topics, some very broad and important, like presidential, some maybe less important, but it covers pretty much almost any important topic of the day that you can try to boil down into a number. There's usually a market on it. And to me, that's amazing that I can go for free to go look at all these probabilities and learn what a bunch of smart people basically think about them.
Are these actually smart traders or are these people who are just doing this? Like, do you get the sense from these prediction markets that these are really people who know what they're doing? Or are these people who just like, I want some action. This sounds like a good deal.
There are a lot of different people on these sites, and there's a range of all the, like everything you described is there. But it turns out in these markets, there are enough of these people, and they are extremely smart. They seem to have access to a good amount of resources, so they trade a lot. So they end up, the prices largely reflect what these people think. And then I'll even point out one of the things that's been interesting for me in the last couple of years is I've gotten to know some of these traders on Twitter. The kinds of strategies these people come up with, which I can talk about, is just like unbelievable to me. Like, you'll have people in a political market who will run their own polls, and they will have better polling data than anyone else on earth. And that's how they make their trading strategy.
Yeah, I mean, it sounds like anything else, where you've got a large number of people who maybe don't know what's going on and a small number of people.
Right. And it's a little counterintuitive, but even just that small number of people that know what they're doing, they're the ones that drive the price. And it's partly because when the prices get out of whack from the perspective of those smart traders, they jump in and they make huge investments.
But it's not an organization that is making these predictions. It is individual people. Do we know who those people are? Is it just some, like, is there a paper trail that you could say, yeah, that was Bob Jones in Tennessee did that one? Or is all of this anonymous at the end of the day?
From the perspective of markets that exist today, it's pretty much anonymous. If I go to a site like Kalshi or Polymarket, those are two leading prediction markets, I don't know who I'm trading with, and I will never know who I'm trading with.
How popular is this? Like, how much money are we talking about? Millions, billions, hundreds of billions?
The markets are growing, so it's hard to exactly know, but there'll be probably tens of billions of dollars traded.
Will it get bigger than what it is? Like, do you think it's the kind of thing that could grow exponentially and rival NASDAQ or the stock market or those kind of things? Or it's going to grow, but eventually only so many people are really interested in this?
That's kind of the $1 million question. And so there's a couple constraints. So as you pointed out, not everyone's ever going to want to do this. So we'll eventually it's kind of like, how many people will subscribe to Netflix? I think we've gotten to the point where everyone who wants Netflix has it, and that's, 1 out of 3 people or something in the United States. It's a lot. But on top of that, there's a lot of headwinds on these markets, which are both some combination of regulatory pushback, congressional pushback. There might be a Supreme Court case involving these markets. And any of these things, of which I can't really tell you what will happen with any of these, there's a good chance that there'll be a clampdown on these markets, and then, they won't get, they'll shrink.
Leads us into the next question, right? Like, is this regulated? Like, is some government entity in some capacity monitoring all of this? Or is it the old cliche of the Wild West?
Right now, there's a fight. And the fight is who regulates these things. And I guess you could kind of say there's like 2 or 3 answers here. One answer is the federal government. There's a regulatory agency called the Commodities Futures Trading Commission. and they regulate futures contracts. And they say, oh, these are a futures contract. They're a version of this, that it comes under our jurisdiction and we regulate it. And currently, the CFTC, this organization, is favorably inclined to these markets and wants them to grow. That's one. But second is several states have said at least some aspects of these prediction markets, particularly sports, which is, at least in dollar terms, probably one of the biggest things that's happening in prediction markets. States say, oh, no, we regulate these. And it's primarily because the states that have legalized sports betting are not collecting tax revenue from prediction market companies, and they want to get their cut. So they're fighting each other in court right now, and we'll see what happens. Like, as I said, I think the Supreme Court might take this up and pick one of these two. And I should say there's yet a third one, which is literally what you said, the Wild West. And we have, for example, the company Polymarket. Polymarket is kind of two sites, but their main site, I won't say it's the Wild West, but they're not regulated kind of by anybody. And so nominally they have their headquarters in Panama, and like, I guess they can kind of do as they like.
Do you get the sense that it's the kind of thing that, like, look, it's a new venture, it's going to get figured out, you got to jump through these legal hurdles, but ultimately it'll all work out? Or do you get the sense that, like, they might get completely shut down?
I think there will be a Supreme Court case. I would imagine the Supreme Court might carve some of what prediction markets are off and say, states, you regulate it, maybe some sports or all of sports, and then the rest of it's regulated by the CFTC. But I don't, it's so for those like listeners who are really into legal issues, it's a very confusing topic in the following sense. The primary boosters for prediction markets are, say, pro-business Republicans. Republicans typically favor states' rights. On this topic, they prefer federal regulation because that's the favorable venue for them. The people who oppose prediction markets are primarily progressives, who typically prefer federal regulation. And in this case, they prefer the states because the states don't like them so much. So it's like upside down world. I don't like, it's hard for me to like, I usually can say, well, I know in the Supreme Court, these justices like states' rights, or everything is so upside down to me that I honestly just don't really know what's going to happen.
Is it the kind of thing that can be manipulated? Because that's where my reaction comes from, in the sense that, like, we're doing a prediction market on what color the Gatorade is at the Super Bowl. Well, it's pretty easy for the person who makes the Gatorade at the Super Bowl to suddenly create the prediction market. Is it the kind of thing that could be manipulated easily?
Yeah, this is a big concern and question, and I'll try to say two things about this. It's important to remember, don't just look at prediction markets. Look at any, say, alternative forecasting device. And so the reason I bring this up is that this week, there were a series of news reports about an organization that was creating fake polls. And the fake polls were related to primarily the Los Angeles mayoral race, but then apparently also something, I think, in the Wisconsin governor's race. Literally, the polls were completely made up. Like, not like they totally made up the numbers. And we still don't fully understand what's going on. There seems to have been one person behind it. The person said they were running a social experiment. I don't really know what that is, but people try to manipulate all sorts of things. And it's not like, to me, the real test is it worse with these prediction markets than with other things like polls? And it's not obvious. That, like, I definitely cannot say I've ever seen a piece of evidence that says this is a bigger problem with markets.
It's the new thing, and there's new concerns, but is it really different than anything that we're already doing?
Right. No, I think that almost all the, like, people are concerned about manipulation. They're concerned about insider trading. They're concerned about people getting addicted to these things. You can make all those points with the stock market, traditional sports betting, lots of different things.
One thing I've ever heard, kind of on the negative side, and put negative in quotation marks in that sense, right, is that looking at the prediction markets, it seems like you can have a prediction on politics, weather, sports, all kinds of stuff. But even some stuff like, oh, that's getting a little in the weeds there. Like, should we be predicting that? Like, are there things that you see that you wonder, should we really be making predictions on these kind of things? Is this celebrity going to die in this week?
Right. I would argue that, yeah, I think it's very reasonable to be a little bit squeamish about this. I would argue that people are already betting on these things already. So let me give you maybe a more practical example. So people were very concerned about betting on either regime change or death in the Middle East, say in Iran. And like there would be a bet, would there be regime change? And essentially you were betting on somebody dying. And people found that very distasteful. And so on that point, I won't I'll have to take a flyer on that. I won't, yeah, I can understand people's concerns. But my point is simply that we have markets already, for example, on oil futures. And people who are trading in oil futures were literally trading in the exact same thing, that the price of oil was linked to regime change in Iran, and you were having people speculate in the oil futures market that were basically betting on the exact same thing, which was what would happen in the Middle East in terms of regime change. So I think the important thing is that even if prediction markets just disappear tomorrow, these same kind of things exist. I think the reason prediction markets are, get the attention on this is because it's much more direct. Like literally you're betting on death, you could say. In an oil's future market, you're only indirectly betting on it.
Are you ready for some harder / listener submitted questions?
Sure.
What do you think is the big risk of this? What do you think is the big benefit?
I would say, to me, my biggest concern, but I don't, it seems not something I have seemingly seen we're anywhere close to, is that people start actually being successful at manipulating an outcome because of the existence of these markets. And the concern is exactly that the ways in which people can manipulate outcomes is usually in a socially non-beneficial, if you have a market on whether somebody will do some kind of violent act, it's very hard to manipulate that to not happening, but you could manipulate it to happening, which is, of course, a very bad outcome. From the benefit, the benefit ledger, the bigger benefit has always been for me to people who do not participate in these markets at all, that eventually we'll get to a point where this is say part of people's news diet, that you start your day, if you're interested in, say, current events, you load one of these prediction markets, you learn about, here's some market where there's a lot of trading and it's moving in a certain way, and then you learn about that topic. And I think that from a civics perspective is great. And I also think the fact that people have a better understanding of how likely certain events are to happen is going to be very helpful for policy discussions.
Is there any statistics or any information in terms of the person who makes the initial prediction? How often do they get it right?
They're furthest from the time of the event. So, if I'm, betting on the temperature, and I'm betting on the temperature a year from now, suppose I'm the first bettor in that market, I'm going to be terrible. But if instead I'm betting on what's the temperature going to be like a second from now, I can do that pretty well.
You mentioned some of the strategies that people use. What are those?
So there's one set of people who are what I'll call better at processing information. So in other words, you and me might have access to the same information about an election, but you're better able to figure out, I don't know, there's this one poll, it's not very accurate, I'm going to disregard it. And you better know how to sort of take that information and make a forecast of the future. So it's almost like these are these Nostradamus peoples. I have no idea how they do it. In other words, I've seen situations where I have the same information as this other person. I can't put it all together, but they can. And they just have that ability to do it. So that's one set of people. The second set of people are people who create information in some sense. And so what I mean by that is they, for example, what is information? It's, say a poll in a political election. And there are people who pay out of their own pocket to do a new poll. I'll give an example of this. In 2024, the most successful trader in the presidential markets was a French person. And we know this person is French because some reporters tracked him down afterwards. And this person ran his own polls in all the battleground states, so Pennsylvania, Michigan, North Carolina, states like that. And he not only ran his own polls, he did something very clever, which was now President Trump has this pattern in polls, which is that people who support him don't typically tell pollsters they're supporting him. So he outperforms polls. It turns out that there's a kind of polling technique called neighboring polls. And what this means is they would call me up and they would say, Koleman, they're not going to ask me how I'm going to vote, but they'll ask me how my neighbor's going to vote. And it turns out that people who support a candidate and aren't comfortable telling pollsters don't seem to mind telling them what their neighbor's going to do. And people tend to vote pretty similarly as their neighbors. So you could do this approach and get it. So this French investor spent millions of dollars running these neighboring polls with thousands of people in all these different states. And he, at some point in October, a month before the election, I think this guy had the best information on earth about who was going to get elected president. And then he made a lot of big bets and he was correct. So there's people who literally create information that we didn't have before they did it. And then maybe the other kinds of traders are just people who, I don't know, I'll call them exploiting technical advantages. And this could be everything like, this is maybe just an example of sports betting. In sports betting, if you are a sports bettor, whether on a prediction market or a more traditional sports betting site, and you're trading during a game, which you can do, if you're doing it based on watching TV, you're going to lose a lot of money. And the reason you're going to lose a lot of money is TV has a 10 to 15 second delay from the real world. And it turns out when you're trading in these markets, there is somebody in the stands who is trading against you with a 15-second heads up. You're going to be in big trouble if somebody knows the future and you don't.
That's fascinating to me when you talk about the sports betting, the idea that somebody could make a bet on, is Josh Allen going to throw a pass on this play? And the person in the stands can hit yes, knows, because they know 10 seconds ahead of time.
Yeah. And I hope people who trade, I get the sense that people who are trading in sports markets are pretty familiar with this at this point, but probably some people aren't, and they're going to lose their money. That's about all I can say if they do that.
Is this ultimately gambling at the end of the day?
I would argue it is not, let me just say this. It's no more so than someone who trades in the stock market.
What do you think is next? Like, what do you think is the next shoe to drop in this regard?
The primary question is, well, where will these things be in 2 years? And I don't know. There's, very broadly speaking, there's like two possible futures. One future is that these things continue, they're sort of doing explosive growth now. They're going to continue to grow. They're going to continue to attract more traders and more interest. They're going to get more coverage in the media, all these things. That's one possibility. Another possibility is, I don't know, the Supreme Court says, these are, we shouldn't have these things. And they clamp down. Now, it's important to remember that in that world, it's not that these markets disappear. This activity, I think, is here to stay. So the problem or the issue will be if the Supreme Court or, say, Congress, waves a pen and says these things are no good anymore, they'll exist, but they'll be unregulated, and it'll be like the Wild West.